How many shares will you need to retire on Amazon stock by 2030? That is the question I'll be answering in today's video. I'll be going over my bear case, base case, and bull case to figure out exactly where Amazon stock could be in 2030 and thus the amount of shares that you'd need to retire. Also, I want to give a quick shout out to Mark Farfan, who did his retirement analysis on Tesla stock by 2030, which I thought was a great video idea, so I'll link to it below. Anyways, if you do enjoy, please make sure to hit the like button for all the work that went into this video, and then if you have not already, please consider subscribing so you don't miss any of my future uploads. Alright, now when it comes to retirement, many of us have heard about the FIRE movement, or in other words, financial independence, retire early. Basically, it involves being frugal, saving up and investing as much money as possible while you're young, and then retiring early off those investments. However, there are many different levels to retirement, so let's assume for this video that you want to live a fat FIRE retirement, meaning that you'll have a relatively high salary and you'll be able to afford luxuries beyond your living expenses every month. Now, I found that the average household living expenses in the US is about $5,100 per month, but by the year 2030, this will probably be quite a lot higher because of inflation. So assuming an inflation rate of about 3% per year, this would bring our living expenses to about $6,500 per month in 2030. Now, of course, we want to have spending money on top of paying our monthly living expenses, so let's assume that we draw down $10,000 per month from our investments, or in other words, $120,000 per year by the year 2030 and beyond. This would give us a healthy cushion if our living expenses were to all of a sudden rise significantly, or if we wanted to pay for a more expensive vacation. You get the point. So by using this retirement calculator online, we can see that $10,000 per month would last us 43.5 years if we were to have $1.5 million invested that was continually growing at 8% per year, which is about what the S&P 500 has returned after inflation on average. But as you can see, the total amount that you'll need invested prior to retirement definitely depends on your retirement age. So if you want an early retirement, you'll probably need more money than this, but if you're a little bit older and retiring a little bit later, you'll need less money than this. All right, now moving on to my Amazon stock valuation model, what I've done is I've estimated the earnings per share that Amazon might produce all the way going out to 2029, because we do want to retire in the year 2030. And as you can see, the EPS growth rates are color coordinated with the adjusted EPS values that they correspond to below for every year. Starting with 2022 and 2023, I directly took analyst EPS estimates that I found on Yahoo Finance under the Analysis tab. This came to $48.92 for 2022, representing growth of 14% year over year. Then analysts expect a huge 49% jump in EPS to $72.89 in 2023. Then for 2024 onwards, I made the EPS growth rate a variable that I can control in the bear case, base case, and bull case to highlight the different growth rates that Amazon could see into the future. So first off, here we can see our net worth target for 2030 is $1.5 million. The stock price for Amazon right now is around $3,150, and then the trailing PE ratio is 73.4 right now. Now, starting off with the bear case, I'm assuming that Amazon will grow its earnings per share, or EPS, from 2024 onward by 25% per year, and this is quite conservative because it's much below analyst estimations of 35% over the next 5 years. I've also assumed Amazon stock will have a trailing PE ratio of 30 at the beginning of 2030. And before we go any further, if you weren't already aware, Amazon just announced a 20-for-1 stock split following in Google's footsteps, which should take place in the summer of 2022. So without considering the split, Amazon stock in 2030 would be worth about $8,340 per share, which I've calculated by multiplying Amazon's EPS and their trailing PE ratio. And post-split, this would represent $417 per share. Now, if this scenario were to come true, you would need about 180 shares of Amazon stock pre-split or 3,600 shares post-split to be able to retire off of Amazon stock by 2030. To buy all of those shares today, it would cost you about $565,000 US, and then it would eventually turn into that $1.5 million at a compounded annual growth rate of 13%. But I think that was a little too bearish considering EPS growth was far below analyst estimates, so now let's move into the base case. In the base case, I'm assuming an EPS growth rate of 30% for 2024 and beyond, and then a trailing PE ratio of 35 for Amazon stock. And this seems quite realistic considering that Microsoft is trading at a trailing PE ratio of 31 right now, and they're growing significantly slower than Amazon would be at this point. So pre-split, Amazon stock in 2030 would roughly be worth $12,300 US per share, or post-split, this would be about $615 per share. Now, if this scenario were to come true, you'd need 122 shares of Amazon stock pre-split or 2,436 shares of Amazon stock post-split to be able to retire retire by 2030. And to buy all of those shares of Amazon today, it would cost you a whopping $383,000 US, which would eventually turn into that $1.5 million again at a compounded annual growth rate of 18.6%. Now, I do think that this is a very realistic scenario for Amazon stock since it has outperformed the S&P 500 in the past by quite a large margin, which I will be showing later, but now let's jump into the bull case. In the bull case, I'm assuming an EPS growth rate of 35% in 2024 and beyond, and then a trailing PE ratio of 40 in the year 2030, which is still significantly below Amazon's trailing PE ratio right now of 73, but it is still quite high. So in 2030, Amazon stock would be worth $17,650 pre-split, or post-split, it would be worth $882 per share. Now, if we all got lucky and this scenario were to come true, you would only need to own 85 shares of Amazon pre-split or 1,700 shares post-split to be able to retire off of Amazon stock by 2030. And to buy all of those shares today, it would cost you a total of $267,000 US, which would grow to that $1.5 million target by 2030 at a compounded annual growth rate of 24.1%. All right, now with all of that said and done, if I'm being completely honest with you guys, I think all of the estimates within the bear case, base case, and bull case could be highly conservative, and here's why. I calculated Amazon stock's annual average returns over history, and the results were quite shocking. Since 2010, Amazon stock's compounded annual growth rate has been 29.2% per year, which is oddly the same return that Peter Lynch got while he was at the Fidelity Magellan Fund, and this is nearly triple the returns of the S&P 500 on average. And if you had invested $10,000 in Amazon stock back in 2010, your investment today would be worth nearly $230,000, or a 23x in 12 years. That is the power of compound interest, my friends, and with Amazon still being able to grow its revenues and EPS at a very rapid clip, the stock price should follow over future years. The other thing is, we also need to consider how big AWS is becoming for Amazon. Here we can see while AWS only contributed 13% of net sales in Q4 2021, AWS contributed the vast majority of the operating income for the business. And again, in Q4 2021, AWS revenue grew 40% year over year, while AWS operating income grew 48% year over year, and this would translate right to net income. So essentially, the main profit engine for Amazon is still growing revenues at 40% per year and earnings at nearly 50% per year, which is absolutely insane. So it's quite possible that all my scenarios are too bearish on Amazon, and I really hope they are, but I like to be conservative, especially when it comes to planning for retirement. Anyways, I absolutely love Amazon's business model and how it's split between e-commerce, a fast-growing industry, and then also AWS, which is a huge profit engine for the business. I definitely think this is a stock that someone could retire off of, given Amazon's amazing track record of execution, and then there's still very fast-growing metrics. But let me know down below which stock you plan on retiring on in the future. I would love to know, and if you do want me to do any of these other analyses in the future, like I could do it for Tesla stock or Google or whatever, just let me know in the comments below. So if you enjoyed the video, be sure to hit the like button and subscribe if you have not already so you don't miss any of my future uploads. And with that said, I will see you all in the next one.